Welcome back. We have Mitessh and Ashwani joining us once again for the BTST calls. As we speak, the 3 p.m. move is not much. Perhaps this expiry equilibrium between 11,550 to 11,600 on the Nifty and around 23,600 to 700 on the Bank Nifty. But it's really been a very strong series. Ashwani, you go first. Thoughts on index and your BTST calls?
I think 3 o'clock move is happening on Reliance, which has fallen about 22 points for the day. I think 2110 is a fairly strong support, and this is a good area to get into Reliance outside my calls, but thought it was relevant. In terms of individual stocks, State Bank is also making an indecent type of move, and 245, 250 is the 200-day moving average. So this is a buy with a stop of 210 and look for targets of 225. Mahindra and Mahindra is a buy with a stop of 620, target of 645. And Jubilant Food is buy with a stop of 2120, target of 2200.
Okay, those are Ashwani's trades. Mitessh, let me come to you as well. What are the stocks that you would look at now?
Yeah. I have a BTST on M&M with a stop at 628 for targets of 645. And I think Kotak, after giving a breakout yesterday, is giving a pullback. So good levels to get into it. Keep a stop below 1405. Look for targets of 1450 to begin with.
Okay, by the way, both these stocks that we discussed with Ms. Tulsia, and I should come up for you again, Century Textiles, where the freeze opened, is now up 11.3%. So there's a lot of short covering angle today being the last day in the F&O for that stock. So 11.2% on that stock. And really Gujarat Alkali is the one which stands out in the cash market. That move is getting bigger now, 8.2% higher on that stock. So decent move happening on that as well. Look at that move, in fact, very sharp, 8%. Mihir Kothari is now joining us, Head of Sales of Motilal Oswal Institutional Equities. Mihir, hi, good afternoon. Good seeing you after so long on the channel. Of course, this is that conference that's going on from Motilal Oswal. Tell us, what's been the mood of the global investors?
The first leg of the conference is currently on the way, where large CEOs are coming and presenting. So more of the conference yet to come. But the mood is generally upbeat. India still represents a market which is underperforming the globe, given the kind of liquidity that we've seen globally as well as in India. So India remains an underperforming market, while valuations in some pockets are actually getting into a no-go zone. On a bottom-up basis, things do remain upbeat, and which is what is getting reflected in the mood of the foreign investors here.
Okay, so the mood seems to be upbeat. Mihir, good afternoon, and thank you so much for joining us. So what's the sense? I mean, is there any measure of discomfort at all with the pace of this rally? Has it caught people by surprise? Or, I mean, what's the general sense? Or is everyone saying it's time to join the bus? Don't ask too many questions.
Given the kind of data that is coming from the ground, it does give some discomfort to the investors in terms of the level of economic activity vis-a-vis how the markets have rallied. But if you actually decipher the rally, it isn't very disturbing, in the sense that the first round of the rally in the market was IT, consumer, and pharma, which were pristine balance sheets. Banking still remains a laggard, but it's done a very good catch-up act in the last couple of weeks. Particularly now, I heard a couple of speakers just before me trying to sound a bullish undertone as far as banking is concerned. So, I think there is a little bit of a discomfort as far as the pace of the rally is concerned. But as more data points come about the economic activity getting back to normalcy, which is clearly visible in some spheres, yet catching up in some, I think the confidence is coming back, and which is where you're seeing the rally actually broadening Initially, April and May, it was more a concentrated rally in IT, consumer and pharma. Those were pristine balance sheets, and people didn't want to take a chance with any company which could potentially have an issue on the balance sheet. To a slightly broader rally now, given that the economic activity seems to be limping back to the normalcy levels.
Okay, limping back to normalcy. So, Meher, in the first part of the conference, what company or kind of company stood out for you?
See, a couple of things struck me from the insights we've gathered at the CEO tracks till now. One was obviously on the banking side, which seems to be the focus of the market currently. The State Bank chairman mentioned that eventually on August 31st, when the moratorium deadline for the borrowers ends, they expect only about 2.5% of the loan book to go into actual restructuring. Now, that's a relief number compared to what the street would have thought it would be for a state bank. And in many ways, it's symptomatic of what to expect for banks in general. So clearly, from the large moratorium numbers of about anywhere between 9 to 14, 15%, depending on the kind of lender you're looking at, if a state bank comes out and says that they expect eventually from the morat number of 9% that State Bank reported to about 2.5% getting into restructuring, that's a fairly comforting thing, and which I guess is gradually that comfort is seeping into the banking names. They're rallying. That banking as a sector has been a bit of a laggard and doing a catch-up rally. So that was one thing that struck me, that yes, getting out of moratorium and into actual restructuring, that number of 2.5% mentioned by the State Bank chairman does give some comfort for the space as a whole. Secondly, I think with a lot of sectors rallying, there has been an expectation of a pent-up demand and that eventually sustaining at higher levels for the auto space. But the sound bites that are coming at the conference, as far as the auto space is concerned, that while we have seen an element of bounce back in demand across segments in the auto space, only the rural-facing demand in auto space, particularly the tractors or some models of two-wheelers, is something that looks sustainable. Two-wheelers obviously could have an added tailwind of a GST cut if and when that happens. But that apart, I think the recovery in the auto space as a lot could be a little more prolonged, and it could be a while before you get back to the FY19 volume levels, which reflected the best of health as far as the auto sentiment is concerned.
Okay. Mihir, I have a two-part question for you. In the conference, who was the most bullish speaker you came across in terms of companies? And there's so many people who have featured, Pidilite and Mr. Rajesh Kumar, SBI. So who was the most bullish speaker in terms of company managements? And which was the sector where the demand commentary or the revival commentary was most bullish?
Well, bulls and bears are nomenclatures generally far more prevalent on the Wall Street than in the actual corporate world. As far as the corporate representation that we've had till now at our conference is concerned, their endeavor was more to give us a perspective of the realities on the ground and how much time could it be before we get back to pre-COVID levels or we get back to the growth stage. So I wouldn't really want to categorize speakers in terms of who was the most bullish or who was the most bearish. I think it was a good reality check for everyone involved, for corporates also, for investors, both local as well as foreign, for a lot of other domestic investors who look up to these kind of gatherings to get a reality check of the extent of correlation or the connect between the indices and the economic activity on the ground.
Okay, fair point. Now, Meher, in terms of, since, you must be talking to a lot of foreign investors, in terms of flows, What's your sense? Because we've started to get once again some meaningful inflows in our market. It's only been 2 days, of course, but do you reckon that this kind of fund flow could pick up?
Well, see, from the fairly sharp negative flows that we saw in the month of March, actually broadly on a monthly basis, the pace of foreign flows actually has been fairly steady or accelerating. In fact, if you add up the foreign flows in the primary markets, because a lot of primary issuances have also absorbed a lot of foreign inflows, if you add that up, that has been foreign inflows going into the primary market almost have been of an equal magnitude as the flows in the secondary market. So that looks like will continue. There could be sector rotation. You have seen different sectors rallying, as we just mentioned. Maybe if as we cross 31st August and the sound bites into September and the next quarterly result season are reasonably positive on the restructuring front, then maybe yes, banking is in the play, and there will be enough money that will chase these names, because some of these names are still significantly off the previous highs that they've seen. So not too worried on the foreign flows perspective. You've seen a couple of soft months in terms of domestic flows, but that's largely been primarily because of lump sum flows getting a little negative in the industry. However, I'm not too concerned from an overall domestic flow perspective, given that the bedrock of that is the SIPs, and frankly, the spread of SIPs is so wide, the SIP inflows are so granular that don't really see a significant dent in those inflows on a meaningful basis. So once you have this lump sum flows stabilizing a little bit, you would actually see domestics also reporting a net positive inflow into equities in the months to come.
All right. Okay, Mihir, good talking to you. Thank you for all the insights and the perspective. We look forward to chatting again in the next few weeks. Thank you. Well, the market has actually turned into the red. So whatever little gain we had was not much on the Nifty and the Sensex. It's been paired off, and the Bank Nifty is also cooled. Anuj, would you read anything into it at all, or is it just one of those phases, a bit of consolidation after a very, very hectic rally?
Yeah, perhaps that, just some kind of consolidation. Look, expiry day, so all these things can happen. We didn't have a 3 p.m. move. The market just decided to consolidate a little bit, but it's still been a trending series. That, no one should have any doubt about. So the market is more up than down. Yeah, it could just be pure expiry factor. Also because, HDFC Bank didn't really participate, and Reliance, it had that mini breakout yesterday. I think that sort of failed today. So those two big stocks are the reason that, you've seen this market actually cool off. Look at that move on Reliance. It's now at low point of the day. So that perhaps explains the move, Surbhi.
Yeah, absolutely. Those are the two big boys that have chosen to set out today. We will take a quick break on that note. We'll come back on the other side with the D Street chatter. Find out what the buzz has been on the trading desks today. Back in just a moment.